In this interview, I have a conversation with Jake. Jake has been trading for a little over 4 years. And oh man, this interview was phenomenal. So Jake has made over $60,000 from trading just in the month of July. Here's a breakdown of his TradeZella stats. And the crazy part is in the month of August, he has made over $300,000. Another breakdown right up here. And with that being said, in this interview, we take a deep dive into his trading style, trading strategies, his journaling method, how he journals, how he uses TradeZella, just kind of taking a deep dive into all of that. And with that being said, I hope you guys find tons of value from it because I did. And yeah, let's dive right into the interview. What is going on, Jake? How you doing, man?
Doing good, bro. Doing good. Thank you for having me. Appreciate you having me, taking time to have me be here.
Thank you for coming on. How's the market treating you lately?
It's been good, man. June has been a fun month. This week has been trickier than most, but very, very happy with June and how it's sort of totaled out.
Yeah, man, this market's been really, really hard to navigate. I think everyone, including myself, we've been having a very hard time with the market in terms of navigating it and understanding what's going on. So with that being said, I just want to dive into your trading. Your trading, from what I've been watching from the sidelines, has been phenomenal. It's been amazing, super, inspiring. And kind of wanted to dive into it. I'm curious myself for this interview, if you want to call it, to dive into, your background, how you got into trading, and, where you are right now. So we're going to start off with that. So walk us through, when you started in trading, how you got involved.
So actually, it was not surprisingly through Instagram is how I found it, right? And it was what really drew me in was a Robinhood screenshot, right? You see the Robinhood screenshots, you see that I saw somebody made like $300 in a day or something. And at that point, I was still in college and I was like, that seems pretty cool, right? Like I was like, okay. And then I signed up for one of these groups that ended up being, a scam, or ended up being kind of shady. But ultimately, who I met through that was a guy named Stock Market Wolf. I think you know him or follow him.
Yeah.
He's a small cap penny stock trader.
Great guy, yeah.
Great guy, really good, down to earth, genuine guy. And I actually ended up meeting him and I was like, okay, I see that this is possible. This guy's doing it every single day. He's making money, or some days he's losing, but he's making money, right? Like if he can do this, I can do this, right?
Of course.
And then I saw as well, I'm not just saying this, I saw your Instagram as well. You two were the first two other Instagram traders I saw. And I think you two have been around for, a while. So I was like, okay, there's more than one person doing this, right? Like a lot of people, it seems like online, are able to make money trading stocks. So I was like, okay, let me give this a shot. So I gave it a shot. I put some money into an E-Trade account and then moved that back to Robinhood when I found out Robinhood existed. And it didn't take long for me to lose that first account. That was nothing.
Hold on, so during what time period was this when you started?
Sorry. This was early 2018. So 2018 was when
2018. Okay, so you started before the whole craze of everyone during,
right. Yeah. So before the crazy COVID crash stuff, but I did deal with 2018. We had the China trade war, and it was not nearly the same as like what we're seeing now or all that, but it was still a tricky time to start. I'd say there wasn't much like clean action, but I had found a little bit of early success, right? I had found a little bit of, pretty much pure beginner's luck, right? Naturally, right? Especially my very first options trade ever. I think I doubled my money overnight. And I was just like, wow. I remember going down and telling my dad, I was like, I don't know if I'm going to use my college degree. Like, I don't know if I'm going to do this. And he's just like, yeah, calm down. You made one trade. The market went up today. Like, calm down. Literally the next day, whatever I had put all of my profits into, it went to zero, right? It was I put them all into an option that expired the next day and it went to zero. So I found out about this trading journey in like 2018. And then I learned through the same traditional ways that people don't have to, but a lot of people do, which is that initial, oh my gosh, this is amazing, to, oh my gosh, I just lost it all, right? But it was early 2018 when I found it. So now coming up about 4.5, almost 5 years that I've been trading as a whole.
Oh, wow. 4 or 5 years. Oh, I actually thought, once again, I had no idea. I thought you started like a year or two ago because you popped out of nowhere. Yeah. Right. And I was like, who's this guy? And then I started paying attention and I was like, wow, I like the content you're sharing. I like the trades you're taking. The trades you're taking are not just you're buying calls and holding until the end of the day. They have a strategy and a reason behind them. And I was like, I like the way this guy trades, and I like the way this guy shares his trades. It's not just, hey, buy calls or buy puts and I doubled or tripled my money. They're actually, real broken down trades. So that's super interesting. So 2018, you get started. So how long did it kind of take you to kind of get a gist of things, get an idea of, getting things going?
So for me, I was a slow learner, and it probably took me the first 9 months before I even won a trade. It was the first 9 months was just me not really knowing what I was doing. And anytime I made money, I gave it back probably that same day, right? It was, I'd be up on a trade, then later that day I would try and make another one and give it all back. And that was like for my entire first 9 months. And it was just, it was a slow burn on like I had saved up like 15 grand from a summer internship, slow burn on that 15 grand, redeposits, and then after that 9 months, I was like, all right, something's got to change, right? Like you're being silly, like this isn't working. And it took me another 9 months to find any sort of remote consistency. From there, it was some big green days, some red days, very mix and match. But no matter what, even when I had built up a streak of consistency, some point, like during the end of a quarter, end of a month, a Friday, I would give it all back, right? So it really took me 18 months before I even like knew what it was like to walk away with a green week or a green month, because my biggest problem was always giving it back at the end of the week again. Zero DT Friday and me are not friends. We
man,
not go well.
I know. Trust me, I get that. I had that issue too. Yeah.
So it took me about 18 months. And then after that, I found a book. I found a mentor, Eric Marcus from Major League Trading, and then a book called Reading Price Charts Bar by Bar. And I was like, okay, suddenly things started to make a little bit more sense.
Interesting. Now, during those 18 months, curious, you never thought about like quitting, giving up?
No, that's one of the weird things that like people have asked me a lot, like, man, like I want to quit. Like that's one of the things I never had that feeling of wanting to quit. And truthfully, again, this is a lot because of yourself, because of Eric, because of Andrew, Stock Market Wolf, because I've seen it was possible. So I'm the type of person where I was like, okay, no, like this is what I'm going to do. Right. Like I found, not only did I know that I wanted to do it from like a money freedom perspective, but the biggest thing for me is I love waking up to trade every day. Like I love trading. This is my passion, right? And I had found that even though I was losing money every day, I had found my passion. And so I was like, okay, I'm going to make this work somehow, way, shape, or form. So for me, I never considered quitting, but it was more just a matter of like considering, okay, how am I going to make more money to refund? I gotta do something else. I got to go find a short-term thing. I got to do this. I got to do that. I got to stick with my job for longer, whatever it may be. But the thought of quitting wasn't really on my mind, truthfully.
Okay, interesting. Because I know a lot of people when they're trading, especially the first 6 months, and they don't see progress or any sort of, consistency, they're like, oh, it's not for me, and they quit.
Yep.
Right. And a lot of people I've seen have that issue. So it's pretty interesting that you were able to not face that roadblock. Now, during those 18 months you're trading, you're not really making money. You make money, you give it away. So I'm assuming you're walking away red or zero by giving the profits away, right? So how are you sustaining your day-to-day life? Like, did you have a job? Were you going to college? Like, what were you really doing?
So during those first 18 months was in my last tail end of college. So I had money saved up from my internships, and my cost of living was at like really low, right? I was a college student. So I had money saved up. So it was really just more like savings I was going through. And so I still had money that I was living off of. I was still doing fine for that. But for me, as soon as I even graduated college and went off to my first job, I still wasn't as consistent. I had reached some sort of consistency, but not much. And at that point, there had definitely been, I say this just to give some hope to people who've been there. There has been times where I had gotten a paycheck, put it right into my trading account, and then lost that paycheck, right? That hurts. I've been there. I know that feeling. I had the worst habits of all, right? That's why, again, I tell people if I can make it, they can make it, because my habits were bad, right? Like it was the kind of thing where it was really gambler habits to like the max, right? So fortunately I had a good job. I studied agriculture in school. So I had not crazy or anything, but I was making like 50K a year, and that was enough for me to stay alive while I tried to figure out trading.
Okay. All right. Interesting. So 18 months go in, still struggling, still having a hard time. So when did you have your kind of, I guess, breakthrough moment, in trading where you started seeing consistency, you have a green month, you're like, okay, I think I got this thing figured out. When and how did you get there?
So for me, it was a combination of two things. It was, I had been a classic, what I call strategy hopper, where I was constantly on YouTube trying to figure out a new strategy, a new way to find levels, a new way to do this, a new way to do that. I was always changing. And eventually I met Eric Marcus, the Major League Trading guy. And one of the books he recommended was Reading Price Charts Bar by Bar. That book, along with Trading in the Zone, which I had read before, but not really. I had like skimmed it, and I was more like, this doesn't matter. Like I just need to figure out my strategy. That's all that matters, right? That's what I need to figure out. So I read Reading Price Charts Bar by Bar for the first time. And from like a strategy perspective, for the first time for me, charts actually made sense. It was like, okay, this isn't fully randomized. The market's not here to screw me. Like everything that's happening has a reason and a rationale to it. You just need to understand the story behind it. So from a strategy perspective, that was the first time where I was like, oh man, like this makes sense, right? Like this, a candle is breaking a previous candle's high. Like I know what should happen. I know what should happen if it doesn't, right? Like there's ways for me to read this. So that was huge. And that was like a huge breakthrough moment for me. And after I read that book and worked with Eric a little bit more, my profits went, whoo. But the problem is that I would still have the same problem I had for the first 18 months, which was some Friday or some end of month or some end of quarter, I would try and push the needle. I would be like, today's the day I'm going to get that big 0 DTE win. Today's the day I'm going to do this. Today's the day I'm going to do that. So even though at this point I'd had my strategy like figured out, and I tell people I'll never change my strategy. I have it. It's done. It's locked now. I'll adapt for the market, but I don't need to change it. I know it'll work. But that'll never change. But so I was even using that, but it was still it was something in the psychology. So rereading Trading in the Zone was when it was like, holy crap, dude, until I make these changes up here, nothing's actually going to make a difference. My strategy doesn't really mean anything, right? Because I had really good strategy. Just every single time, it would still just come down to me giving it back in some way, shape, or form, right? Me with a rule break, some way, shape, or form. Me playing SPX, 0 DT, some way, shape, or form, right? All these different ways. So eventually reading that book and then reading The Mental Game of Trading, I was like, oh, wait, like
both really good books.
What matters.
Both are really good.
What matters, right? And so those, in terms of breakthrough moments, I broke through on a strategy portion, but that to me wasn't the real breakthrough. The real breakthrough came from The Mental Game of Trading and from Trading in the Zone.
Yeah, no, it's interesting that a lot of traders that get involved in, including myself when I first started, I didn't realize the importance of the mental side of trading opposed to the technical side. And I did the same thing you did, strategy hop from 1 to 2, and I never gave a strategy any time. And most of the time, the strategy wasn't flawed. It was me, right? And it took me about 2 years too to kind of figure that out. And then when I personally figured it out, that's when I also kind of started having my breakthrough moment, because everyone thinks, oh no, I got it. I'm not going to have these issues. I just need to know how to trade. I'll take care of the mental. And I'm like, no, the mental is really, really serious. And that's what holds a lot of people back.
And that it's really what it is. There have been people that I've been friends with who started trading at the same time as me, and they're still struggling to this day. They still can't find their consistency edge. And to this day, I'm asking, like, have you read Trading in the Zone yet? And if multiple of them have been like, no, I just keep putting it off. It's like, I don't need that help though. It's just the strategy. It's just if I can read the charts better. I'm like, no, that has nothing to do with it. Your strategy is probably fine. It's probably works just fine. It's just that you can't, so it all comes down to the mental. It's literally 100, like 90%, it might be 95, whatever percentage you want to call. It's all up here. I couldn't agree more.
No, I agree. I absolutely agree. So you go into that time period, you understand that mental is a huge role. After reading those books. Now, how did you implement the mental into your trading? How did you bring that in to improve your trading?
So the biggest thing for me was creating a plan, right? I was one of these people who the initial way that I was trading, and part of this, I'll give a little bit of the credit to my strategy too, because it started to require a pre-market plan. In the past, I was more just waiting for a pattern during the market, waiting for a triangle or something like that to trade. But those mean that they're unplanned trades, right? Those mean that you're watching and waiting, and they're not something that pre-market you put together a thesis, you put together a plan. So for me, that became huge, which is, okay, it's time to start formulating my plans in advance. It's time to start giving some if-then scenarios, time to start creating that. But then more importantly than that, it's time for me to start following the plan, right? Because anybody could create a good plan. You see everybody on Instagram putting buy calls over this, buy puts under this. Like, okay, well, show me how you executed on that plan, right? Like, did you follow it? Were you able to get your entry? Did you follow your stop, right? So for me, it was those sort of hurdles. And those are still the ones that I'm working on today, right? Those are still the ones that I'll say, and I do not just me, but I think every trader out there is that if you have, theoretically, right, if you have a plan to trade, if it should either be a good win or a small loss. If not, you didn't follow the plan, right? And so that to me is still something that I'm working on to this day. But the mental side, right, having that plan, and more importantly, knowing that I have to follow it, it really doesn't mean anything, was probably the biggest, how I implemented that into my structure.
Interesting. So I want to take a step back on the plan. So yes, having a game plan is very important, and implementing that game plan is even more important. But now going into the game plan, how did you know that the game plan I have is a solid game plan? Because
Right.
anyone, like a person can go and just make a game plan and say, oh, well, I followed it, I lost money. But how do you kind of decipher if this is a good game plan?
Right. So for me, that came into the strategy portion of how I was trading. Right. That ultimately comes down to what is the technical factors that are leading you to create your game plan, and all that. And for me, I was making it really complicated before I started to find success. I was trying to find the perfect trade and everything lined up and indicators and all this. And eventually, what I found it came down to was relative strength and relative weakness, right? What is strong compared to the market? What is weak compared to the market? And so for me, while those setups won't always play out, the foundation of a good pre-market plan is what names am I watching and how are they relative to the overall market? Are they displaying strength? Are they displaying weakness? And there are times when strong things are going to fail their breakouts and be weak all day. But a good chunk of the time, if you look at your watch list pre-market, whatever is up most pre-market will probably be up most throughout that portion of the day. Whatever is down most pre-market will probably be down most that portion of the day. From there, you have to find entries, create a plan. There's a lot more to it, but the foundation is this name strong or weak relative to the SPY or the NASDAQ or whichever index that you're paying attention to for that. So that to me was like, okay, now that I know what I'm looking for a little bit, now that I know like, hey, Amazon's gapping up while SPY's gapping down, I should probably be watching Amazon longs, right? Like now that I have that foundation, I was able to, my plan had more validity to it, right? It was more of a solid plan where it's more meaningful.
No, interesting. It's interesting as you're talking, I'm taking notes to the things you're saying. And this goes for everyone. Like I've been trading for 9+ years. And I tell everyone, no matter where you are in your stage, look at other traders that are having success and look at what they're doing. Like for me, one thing that's been very crucial, even until now, I learned from all types of traders. If you've been trading for 1 year, 5 years, if you have success, I'm like, okay, I want to now look at what you're looking for tomorrow and see if I can understand and get a new angle in my trading. So this goes for people that are like, oh no, I've been trading way longer, I made more money. No, like always keep an open mind, guys. If you want to keep growing, make sure you're always trying to learn from all types of traders. And that's one thing with me. Like when I doing this interview, and for everyone watching, I didn't ask Jake anything prior because I wanted to come in here knowing everything, and coming from a curious standpoint of view, so I can learn from like an audience standpoint of view. No, but that's really, really interesting about the plan point of view. You have a solid plan. Now you're implementing that plan. Right now, as you're implementing that plan, in terms of building your watch list, you're looking at relative strength, relative weakness, looking at SPY, Amazon gapping up, gapping down. Now, in terms of setups and executions, like how are you going about that?
So for me, it was that book, The Reading Price Charts Bar by Bar. And that one, what changed my mind or changed my world is that every individual candle is important in some way, shape, or form, right? It's telling some sort of piece of information because there are a certain basic set of like rules and principles that we all know as traders, right? Like when a candle breaks the previous candle's high, we would expect it to keep going higher, right? Or if it breaks its low, we'd expect it to keep going lower. So using these sort of basic rules, I was able to create some sort of structure that says, okay, here's where entries are able to be available to be taken. And I have to give a lot of credit to Eric from Major League Trading as well, because
I know Eric. When you say Major League Trading, I was like, I know who you're talking about. Yeah, great guy.
He's a great guy. And from a technical charting perspective, I've never met somebody who's able to like just read a chart like him. It really was mind blowing to me when I met him reading charts. But I took what I learned from him and I twisted it and made it my own a little bit. Like him and I have very similar styles, but it's different. I think, which is just a little tangent, but the side note of any great trader, like you mentioned, you take little pieces from everybody, right? Mm-hmm. You use your own, because no two human beings are the same. You're going to want to use your own individual style, but take pieces that you learn from people. But sorry, a little side tangent there.
No. It's interesting you brought that up because I was going to dive into that. The way you found how to build your game plan, or the way you found what you're going to look for, or what your trading style or edges, or how you trade. How'd you come to that conclusion?
So it was a combination of like two different mentors I'll get back to. One is Eric from Major League Trading, and then one is a guy who's not even on Instagram. He's just a Kansas City guy that I know named Chris. And those two guys really helped me I take pieces from both of them. And I was able to say, okay, I found now a strategy that works, that he uses that works, that he uses that works. And there's parts of them that I both like. And then from me, I was able to sort of translate that into what now I use as my strategy, right? So for me, everything's simple. I try and keep it simple. It's levels, it's trends, and it's candles. It's those three things. You add in anything else and things can just get really noisy. So what I have found to be the most successful for me is trading anything with trend. And that sounds simple, and it is simple, but it really is the most meaningful thing you can do. And if you can have it be with trend on every different time frame, then it's even more powerful, right? If you are shorting something that's in a weekly downtrend and has a weekly lower high, right? Like the market, much like the market itself, then the daily's in a downtrend, the 5 minutes is downtrend, the 2 minute, all these different things, then all of a sudden your trade has, it's a whole lot of factors backing it up. And it's not factors like, oh, we're under a moving average, oh, we're under this. It's everything that we learned basically in the beginning of our trading, higher highs, higher lows, lower highs. That's like the core of what I trade. I just use it in a bit of a more advanced way than I think most people think to use it.
Interesting. So I'm assuming you don't really use any indicators.
The ones that I will have, I don't mind if people use the 20-day EMA. I don't mind because it's kind of just like a median. Or if people use VWAP, I think that has value, right? On like a daily chart, a 200-day moving average has value. That's going to be important for me. But on an intraday, 5-minute, 15-minute, hourly chart, I prefer nothing. I prefer it just to be blank, just the candles itself, because anything else for me, kind of clouds the story that the candles themselves are telling me. And if I just follow the candle and most importantly, the trend, then I'll be able to decipher all the information I need. So I try and stay away from any of the indicators. I know especially for newer traders, VWAP can be really helpful and there's great setups off of VWAP. But for me, I've just found that like if I leave VWAP on there, sometimes during the middle of the day, I'll be like, oh, I might take a VWAP trade here. It's like, wait, that's not part of your system. You don't use VWAP, right? Like why? So for me, I just try and remove it because it prevents me from tilt prevention, right? Prevents me from going on tilt and taking unplanned trades ultimately.
No, interesting. So the only, I guess, indicators you primarily use 20-day EMA and you said VWAP, or you don't even touch it?
I don't keep either of them on my charts, but if people use them, I don't those are ones that I've used in the past. One of my charts will have VWAP on there, but I have like 8 charts on my screen. 7 of them have no indicators, no nothing. I'll have one in the top right corner with the 20-day and be like, and I think the 20-day is a good median of price. It usually acts, price doesn't stay too far away or above or below for too long.
What time frame do you use the 20 on if you use it?
The 5-minute for the 20-minute, for the 20-day. Yeah.
So when you started,
sorry, go ahead.
No, go ahead.
I was gonna say that comes straight from the Bar by Bar book, that guy. And really, his name is Al Brooks, the one who wrote that. Really what the 20-day kind of signifies for him is on things that have a strong trend, like a super strong uptrending day, a pullback to the 20 is healthy. And that's where you can look for your first entry, right? So then for me, I drill it down a lot more into what's the candle pattern, where's my entry, where's my stop based on the bars. But that 20-day can be like a reference point, right? As to, okay, this is a strong trend. We're just going to pull back to the 20.
Interesting. Now, when you started, did you start off using indicators? Curious about that. Yeah, right.
Oh yeah.
That's
MACD, 5 different EMAs on the screen. If it was above the 9 or below the 20, I wouldn't do this. I wouldn't do that. And that's kind of one of the things that I talk about a lot with people is that I think that when we first learn as traders, in the very beginning, you learn stuff like support and resistance, higher highs, higher lows, lower lows. Those are the very first things you learn. But for most people, we don't learn the right way to use that information. So we then shift gears and look towards indicators and say, okay, I'm going to have this indicator tell me this indicator tell me that, this indicator tell me that. And all of that information is actually just more confusing. And the right way to go about it was all the information that you learned in the very beginning. You just weren't necessarily applying it in the way that you thought, right? If people think of higher highs, higher lows, and we'll talk about this on a trade example later on. Yeah. But for me, that is like, if you drill down into the nitty gritties of it, that will tell you all the information you need to know. I started out with them and I thought that they were going to save me from charts that didn't make any sense and all the beginning stuff I learned. And then eventually I flipped back and I was like, man, all this stuff in the beginning is really where, they teach it for a reason. You learn trends, you learn higher highs, higher lows for a reason. You just got to know how to use them.
No, absolutely. I agree with that too. I think most traders, including myself, I did the same thing. I started off with the basics. And then when my trading didn't go well, I would say, well, I need a new indicator. Yep. And my chart, when I first started, if you looked at my chart, you couldn't even see the candles. I had VWAP, I had 5 different moving averages. I had the ADX, the MACD, RSI, and I'm like, okay, one indicator is saying buy, one saying sell, one saying this. What do I do?
Right.
And then you just randomly go in, and then over time, I started removing things, and I personally started seeing things a lot more clearer. And I was like, hey, I don't need these indicators. And I tell all beginner traders the same thing. I'm like, hey, focus on price. If you can read supply, demand, where price is heading, where trend's going, and you can get a good entry in that, you'll be able to make money. But if you start adding tons of different indicators, tons of different things on your chart, you're just going to overcomplicate your trading.
Exactly. It's that overcomplication for me. And for the KISS, keep it simple, stupid. That works much better and more effectively than most of the most complicated strategies out there.
Nice. Now you brought something up very interesting. You said, sometimes I'll see a stock around the VWAP and I want to trade it. And I'm like, wait, hold on. That's not in your system, right? Yes. So let's dive into your system a little bit, how you establish that system and why don't you take trades that align within your system? The answer is kind of simple and why you don't, but I want you to reiterate on that because I know people sit on their screens for hours sometimes and just take all types of trades that don't even fit with the stock they're watching for the day or the game plan they have.
Yeah, and they make no sense. And then ultimately the ones they planned end up working out and they're like, wait, what? Oh man, Amazon went there. I wanted that, right? So for me, it all comes down to the relative strength and relative weakness, I think is the big portion of it. And then, like I mentioned, the trends, right? And so being able to find, for me, it literally all comes down to, is something uptrending or downtrending and on which time frame is it, right? So actually, let me pause there and insert one other thing. A little tip and trick that I use that I don't think, I think that I call it the gift from the market gods that nobody uses, nobody pays attention to it, is the opening price. The opening price for the day, if you think about it, if we are below the opening price, no matter what, the daily candle is red. In theory, as day traders, do we want to be long on a daily candle that's red? Probably not, right? We would probably wait for it to either, depending on the situation, maybe if we're consolidating beneath, looking for a break above. But generally speaking, if we're far beneath the open, I'm not all that interested in day trading along because the daily candle is showing me some sort of weakness. It's red. If we're above the opening print, we're green on the daily chart. That all of a sudden to me opens up a lot more long opportunities. And you would be shocked at the reactions that you would see at the opening print for the day. And I think that before I met Eric, I had never heard anybody even talk about it. And it to me wasn't something that was a main factor. Now it's an automatic key level for me, and the amount of setups that come off of the opening print and the types of reactions we see around there is incredible. And today there was a great example of one on almost every name you can see. And that to me is one of the tips and tricks to kind of go back to your question a little bit of how do I determine strategy, what am I looking at? What not VWAP bounces? One of the core things I'm looking at is, hey, is something above the open or below the open? Because if we're below the open, theoretically, we're in a downtrend, intraday perspective at least. And that's not something I necessarily want to long unless it's my whole plan is to get back above the open, shortly after, right? So for me, that would be one of the things that I would say from the most simple things that I can explain that could give some value to people. The opening print should be a key level for you for the day automatically. And the types of reactions that you'll see around it are astounding. They really are.
Interesting. So you bring up the opening price, the stock opening below it or above it. So for example, today, right? From what I've seen, the opening price, everything dumped below it, and then we bounced, having a heavy bounce. So when you are playing this, and we'll dive into charts in a bit, how on a time frame basis, how long are you playing this? Because with the recent market, we're seeing dumps, and then midday or 30 minutes in, we're seeing massive reversals to highs, or we're seeing pushes on the open, and then we're seeing dumps. How are you kind of reading that? Are you playing it on a shorter time frame? Are you saying one and done? How are you going about that?
So there's a few different ways. So for me, everything is a piece of the larger puzzle, right? So something being above, and this is a great question, because something being above or below its open is not automatically a reason to go long or go short, right? And I think that's a really important clarification, but it's one piece of the puzzle, right? So for example, today, the SPY had an early morning dump. We had an aggressive pullback early on, and we actually got an hourly close beneath the level I was watching, which in my system kind of signaled that, hey, be cautious on longs until we're at least back above the open. From there, after we had that early morning sell-off in that flush, the intraday chart actually did flip. The smaller timeframes flipped into an uptrend. So even though we were beneath the opening print, We were starting to make higher highs. We were holding pullbacks. And all of a sudden now, once we get towards the opening print, we are in a 5-minute uptrend. We get a bull flag start to form underneath the opening print. Now, all of a sudden, there's these pieces to the puzzle. I'm like, okay, we attempted to go lower at first, kind of failed that push lower, got the rally back, flipped the intraday trend into an uptrend. Now we're consolidating and bull flagging beneath the open. If we get above, there's real reason to believe we'll get continuation, right? There's real rationale. So again, from there, I'll dive in and I'll have to find a specific candle that allows me an entry. All of my stops are usually one candle away. The candle I enter on, if it fails, I get out. But for me, it's all like formulating pieces of the puzzle, right? And that first piece of the puzzle that I think is overlooked a lot is, are we above or below the open, right? And one of the main ways that I'll factor that in just to help me is it's kind of like a tilt prevention rule. And for me as a trader, everything is tilt prevention. I told you I have bad habits. So everything I learned is bad habits. So everything I can do is to prevent myself from going on tilt. Historically, one of my bad habits is trying to catch knives on days, and it would have maybe worked out today, but trying to buy on big red days, right? Trying to buy the bottom, trying to time it for just an intraday bounce. My thought process is like, oh, we're so far down on the day, we can't keep going down. I'll just catch a bounce back up, right? And most of the time, you're just catching bounces into lower highs. You're catching little dead cat rallies. They're not worth your time trying to catch those bounces. And the easiest way to just eliminate that is say, hey, we're beneath the open, well beneath it. Longs aren't even on the table for me right now, right? Like I'm just not even considering it, right? And so that to me is a huge headache preventer. That I'll do. So sorry, I know I kind of tangented from your.
No, you're good. You're good. I'm getting it. We're going to dive into the charts. I think people watching are going to get a better understanding once we're going to the chart. But I just want to ask something in between that, and just to re-clarify. So with your system, you're not playing like like for example, me, a lot of times if we see a heavy sell-off in the morning and it's a weak sell-off, I'll play the quick bounce or reversal. Mm-hmm. But I'm playing a smaller time frame. So you're not playing that, right? Mm-hmm. Okay. And the reason I want to re-clarify that is because for people watching, I want people to understand we both have obtained success from trading with different methods of setups and ways we look at the market. So the reason I bring that up is because as you were explaining, your way of trading, which not saying is wrong, not saying is right, it works for you. My way of trading, not saying it's right or wrong, works for me. And it's allowing me to make money. It's you guys need to find your own way of trading that you are comfortable with. Some people like very fast-paced trading. Some people don't like fast-paced trading. Some people are very impatient where they need to get in and out quick. Some people have the patience. So you need to understand what works for you and what setups and what market conditions and what charts and timeframes you need to look at. Like I know some people try to trade off the 1 minute time frame and they get crushed. And I'm like, hey, you should go on larger time frames. You shouldn't try to catch these quick bounces or quick reversals because you're not able to recognize them fast enough, or your personality doesn't align. And I think this is a great example because the way I trade and the way you trade is a little bit different. And to me, that's always interesting because it's like you're able to achieve success, I'm able to achieve success. We both trade, but in a different way. So I think that should be an eye opener for everyone listening or watching.
And I think that just to kind of bounce off that really quickly, I think it's so interesting because that was always something that stuck with me, right? Is that you have a different strategy from Eric, who has a different strategy from the Trade Like Mike. All these people who I would look up to as, when I was in my pages, they all have different styles. But the best ones that you can see all have the same thing in common, which is the discipline, right? The psychology, the mental aspect of it. Every one of those, the people who in my mind are the gold standard of Instagram traders, if you will, yourself, Trade Like Mike, two are the most disciplined people I know, right? You're the most, and you actually trade less than most people, that far less than most people out there. You two trade short, small caps, you trade options and egg, two completely different things, both different from my style as well, but it's your discipline, your patience, your psychology. And that's what you have similarities on more than anything. Yeah. Right? And that's where that's why you're both so successful in my opinion. So I think, just to sort of rally off what you said. Yeah, I think that it all ties back to the mental aspect, right? Because strategies can be different, but mentals are really where it'll make or break you.
Yeah, no, absolutely. I think mental is super important, and identifying that, learning about yourself, learning what what works for you, what doesn't work. I think anyone that is kind of stuck right now, that's where you need to kind of piggyback on and figure that out, instead of saying, well, this is how Umar trades, I need to trade like Umar. This is how Jake trades, I need to replicate that. No, see what works for you, what doesn't work with you, what aligns with your personality. And once you figure that out, see if you're following your rules, see if you're actually executing your game plan. What in your game plan needs to be improved? What in your rules need to be improved? Like I have a rule with myself where if I have a strong opening trade, right, and I'll dive into your rules too. If I have a strong opening trade and I do very well on my next trade, I will not size up on. Right. I've noticed in the past, I will have a great trade on the open. I'll make 20, 30, 40 grand, whatever it is. And right after that, I'll say, oh, I'm so good. Size up, give that back plus more, because my size increases massively. So I've learned over the years, like, hey, don't do that. If you get a big trade on the open, take that trade on the next one, keep size consistent or cut down a little bit.
Yep.
Right. So going into rules, which was my next thing, what are some rules that you have implemented in your game plan or in your system that are very beneficial?
So the first one is that opening print rule. And I think that saves me a headache, and that will make more sense once you dive into chart. But that is one of the first rules I have, which is if something is really weak, I'm not trying to buy it because I get myself in more headaches. Something is really strong, I'm not trying to short it because I just get myself in more headaches than that. Some of the other rules that I have is usually by about 8:30 a.m. my time, so about 11:30 Eastern time. If there's nothing on the charts, if there's no setups, then it is physical removal from the screens for me, right? Which means I'll take a walk, I'll skateboard, I'll go do whatever. I'll get away from the screens, because no matter what, if I don't see it set up within the first 2 hours, if I don't see anything that's worth executing, it's worth me taking a break and getting away from the screens, because I'm either wasting my time on a day that I shouldn't be there, or I'm not looking at it the right way, and I need to step away to come back and sort of get a clearer picture on what's happening, right? And so for me, 8:30 East or 8:30 Pacific, so 2 hours in a market open, I have an alarm on my phone that goes off. And if I'm not in a position, if I haven't found anything yet, it's literally physically remove yourself from the screens, right?
Oh,
physically
wow.
Get yourself
so you away. Set the alarm. So you have
I set an alarm. I set an alarm. I said, bro, I had bad habits when I started doing this. So I take every precaution possible to prevent myself from going on tilts. I have alarms at 2 minutes into market open that says flat ? Right? Because it's if I'm in a trade that quickly.
Wow, that's interesting. That's really, really interesting. Yeah, I like that actually.
I keep myself accountable, and it's the way that it may sound silly, right? It may sound
no. I'm thinking about it, and I'm like, wow. Yeah, I'm like, wow, that's actually a really, really smart thing. Wow.
At the very least, it just gives you like a mental check, right? It's like, are you good? So I have alarms like 5 minutes, 15 minutes in, and then before the first hourly close, and they all are just on my phone. They say mental check, and it's mental. It's like, dude, what's your mentals like right now? Or do you feel like you're going to go on tilt? Because if you do, you need to physically remove yourself from the screen.
I'm gonna steal that from you, by the way. The alarm. I'm gonna.
Dude, it's huge.
There you go. I'm stealing that.
Difference for me. Because I also, now it's in my head that I know it's coming, right? And if I know my alarm is coming, if I have that temptation to push the button and like right at market open, it'll be that sort of feeling like, oh man, your alarm is about to come, and you're not going to feel good if you're breaking this rule, right? You are not going to be happy with yourself. You have to look back on it and do this. So those are the alarms. And I think time, because as traders, we have no boss, right? There's nobody telling you that, Umar, you've worked 6 hours today, man, or you worked 12 hours this week, or 12 hours, or whatever, you got to go home. There's nobody telling you that. Right? Yeah. You could sit on the screens and watch the market open, and then afterwards you can watch futures all night if you want to, right?
Yeah.
And so, or you can watch crypto or whatever the case. So if you want to, you can sit at the screens all day. So I think having some sort of time structure is very, very key. And whether that time structure is getting you away from the screens as a whole, or it's just something like a mental check-in, like, hey, alarm going off, are you good right now? Because if you're not good, it's probably smarter to just leave. You'll actually save yourself money by just taking this loss and leaving, right? So time structure, I think, is probably one of the biggest thing that made a huge difference to me.
Yeah, no, I like that alarm thing a lot. I think even for me sometimes, because you're in front of the computer for 10 minutes, 20 minutes, an hour, 2 hours, you don't realize the time. Sometimes it flies, sometimes it's slow. Next thing you know, it's 3 hours into the market, you've not taken a trade. So I think having that reminder that tells you like, hey, if you haven't taken a trade, walk out is good. Because sometimes I'm in front of my computer and 3 hours goes by and I'm like, wait, it's been 3 hours.
Yep.
Right. And I'm like, what just happened? And sometimes a minute or 2 minutes feels like an hour. Yep. So 15 minutes or 5 minutes in, I'm taking a trade and I don't see a trade. I'm like, wait, why am I taking this trade right now?
Yep.
So I think those reminders are good. And then mentally you start wiring your brain to kind of look out for those alarms, and then you start establishing real structure. That's actually a really important point you brought up. I think obviously in trading, you don't have a boss, you don't have anyone telling you what to do, which is great. But I also think it's a terrible thing for people that lack structure and lack discipline, right? Because not having someone to tell you what to do or not to do obviously sounds cool and whatnot. But the downside is we as people sometimes starting out need someone to tell us, hey, if you didn't take a trade, leave. It's only a minute in, 30 seconds in, don't take the trade. Or, hey, you can't risk more than X amount. So I think setting those rules and even having maybe an accountability partner for some people, or having a person to speak to, because trading gets very, very lonely. And working with that would be a great help for upcoming new traders.
Yeah, I could not agree more. I think that's one of the big, it's under talked about in our community. I think it's something that's not brought up enough.
Yeah, absolutely. So just taking a little step back. So 2018 start, 18 months in, you find your mental, you figure out mentals, the big part. You start establishing your game plan. You start figuring out how to find names, what to look for, what not to look for. You start finding consistency, right? Now, in terms of consistency, obviously I'm assuming you didn't start with the size you're starting with now and you're trading with, because I've seen your first week of June and second week, and I was blown away. I was like, we need to get on a call. Like I want to ask you questions, right? So how did you get to that size point of, increasing your positions, increasing your risk tolerance? Like how'd you do that? Was that an overnight thing? Was it a slow thing? And what was the process behind it?
So there's a few different answers for that. And the first one is, for a long time in my trading career, what I did was trade with a $2,000 or $3,000 account and treat it like it was 10, right? Meaning that I'm okay losing up to 5% of a $10,000 account, right? Which would be, $50, right? Or whatever, what was that? $500, excuse me, which was the math, right? So I would be trading it more aggressively and be willing to do that, knowing that I had money in my bank account that I would be willing to consider part of my trading account, right? So my risk management style is unique because I've still translated that to today. I actually only keep my trading account generally now it's around 20,000 and all that, and I withdraw every day. But in my head, I'm treating it like it's 100, right? So if I were to go on tilt one day, things were to go massively wrong, and I lose half of my account, for example, it's 10% of what my real account is. That's a bad loss, but that's a survivable, reasonable, type of loss, right? For me, I've actually found that it's safer for me to keep less money in my account, right, and be more aggressive with it than it is to keep more in there. Because if I'm trading with us, $100,000 trading account, right, and I have a rule that I'll never lose more than 3%, $3,000 is, I think, a good, risk tolerance. Yeah. Maybe even a little bit smaller if you have a bigger account, whatever the case may be. What I found for me is I'm actually more in jeopardy of averaging down, adding positions, ignoring my stop, whatever the case may be, when I have the 100 in there, when I have the full position in there. So my method of risk management is kind of unique, because if somebody were to look at my, $20,000 account, they'd be like, dude, how you don't manage risk at all, right? Like you put half of your account in one trade, not knowing my stop and all that, right? And I would say, no, to me, it's actually safer. And it's actually because what I have shown myself historically was that I have a problem sometimes, not just me, everybody, when you go on tilt, right? You average down.
I've been there. Yeah.
Nobody can stop that, right? It's going to happen to no matter how good you are, you're going to make those mistakes. And what I found is that I have too much temptation to add size, average down, whatever, when I have more money in my account. So what I will do is trade with a lesser amount and treat it like it's more, right? So for me, this started when I was doing $2,000-$3,000 accounts, and I was able to grow them by $400 or $500 a day, $300 or $400 a day, which is large percentage gains, right?
That's phenomenal.
Yeah, right. But I was, again, if you were looking at outside in and not knowing that, or not knowing how I use one candle stop losses and such, you'd be looking at like, man, this person's way over leveraging, right? This person is way exceeding that portfolio. But to me, I think it's a huge, this is where risk management, for me, I size my whole account based off of a certain number, but I don't have to keep that number in my trading account. I think it's safer for me to size my account like it's 100K, but keep 80 in a savings or checkings or another investment in whatever, and actually trade with the 20, right? And that way, that worst comes to worst, and I go on a big tilt day, I have an issue that comes up or something, maybe it's not even my fault. Maybe it's what happened a couple of weeks ago with that quote issue detail, where everybody was losing money because the options weren't updating, right? Maybe that happens. And all of a sudden on a day like that, very easy to put yourself on tilt on a day like that. And for me, I found it to be safer to just keep less in there, right? So there's a two-part answer to your question. That's how I manage risk as a whole overall. For me, in terms of scaling up and sizing up, because I think that's one of the hardest parts of trading is when, and even to this day, when I try and size up, half the time I get kicked in the face still, right? It's just, I feel like it's how it goes, right? For me, what I did is for months and months on end, I would trade with a $2,000-$3,000 account and withdraw daily, withdraw every day, withdraw every week. Whenever profits made themselves available, I treat it like a job. I come in, I start with X, I try and make however much the charts allow me to make, and then I go back to X, maybe leave a little buffer in there, or whatever the case may be. But it was like a job for me in the beginning. I was trying to treat it like a job because I had lost too much. I had blown too many. And mainly what I had done too much of is build an account and then blow it all one day because I'm on tilt and I say, well, I'm just giving back profits, right? I can make those back. And it's like, what? No, you just gave back an entire month.
Exactly.
Doing, right? Those aren't giving back profits. That's your money. It should be in your bank account.
You're giving back your money. Yeah, I hate when people say that. I used to say that to myself at a point, and I stopped that. Yeah.
It's like, it's not profits. That's your money.
It's your money. You're giving away your money. Yeah.
So for me, what I found is that I have the withdrawal method, and that was huge to me. I still, to this day, it's very important to me. And I'll scale myself up a little bit by meaning withdrawing less and less. You know, if I made 10 grand that day, I'll withdraw 8 and leave 2 in there. So maybe size up, take a little bit of a bigger position if the charts allow for it. But I stayed at a relatively similar size, scaling small from like 2 or 3K accounts to then a 5 to then a 10K account. And then what it was for me was actually of last year, 2021, in my opinion, we had some of the best trading conditions in the world, right?
Yeah.
And during September, October, which is right when I started to pop up on Instagram, I was looking at, after September ended, I was looking at some of the charts in October, and it was mainly like Tesla. And I was like, man, I've been around these charts for a long time. I really think these things are going to make massive moves. I think like if there's a time to size up, I think it's now, right? And I think it's now. And so from there, what I did was during those super strong conditions, I sized up and I took on more risk, and I was willing to take bigger position sizes, right? I was willing to put on more. And those turned out to be my best, I think, 2 months of my career ever, right? Still to this day, even though I'm trading bigger now, I still haven't surpassed those 2 months in terms of profits, right? It was just crazy price action. It was super forgiving. It was all that. And that to me was like the perfect time for me to show and execute that, like, when the conditions are great, I know I can make so much, right? Like I can really execute on this well and take advantage. And then December rolled around, and like day 1 or 2 of December is when we started to flatten out a little bit, or sometime in December. And I took like a 10K loss or something. I was up like 200K over the past months, but I took a 10K loss, and it's kind of like a reality check. And I was like, okay, these amazing friendly conditions might be coming to an end. And I went back down to a 10 or 20K account. And I was like, and that was the best decision of all time, because 2022, as we know, has just been, like you said, if you're a good short trader, you could have made a lot of money. But I mean, even so, the moves are so choppy. It's hard to catch them. They make them trappy. It's not like this year has been so tough that for me, I'm still sized down compared to what I was trading at the end of 2021 and 20. Like then my max position size was like 35,000. Now I'm like nowhere over 15 or nowhere over 20. Like, you know, my rules are much different now that we've had these types of conditions. So
good adjustment.
Super long answer. I know.
No, you're good. You're good.
But it was really, I grew slowly until I found the conditions to be like, man, these are my A++. This is where I'm going to execute. And as soon as I felt myself starting to go above and a little bit until a little bit above that, very happy to say that I was able to cut it off there, right? And scale back down to now where I'm at. Up until a few months ago, I was up at just trading a smaller account and just taking what I could get in a market that wasn't giving a lot, right?
Interesting. Okay. All right. Yeah, I think, what we can do next. I had a few other questions, but I think going into charts a little bit, going into your setups, just walking us through so we can see like a real like kind of example, because when you were talking, it's harder for the audience or to catch on. and then we'll go end it off with a few more questions that I'm actually curious about. So here, let me give you access.
Awesome.
Where is it? Make host. Boom. All right, you should be able to.
Perfect. Let me
share your screen.
All right, and I have it pulled up on TradingView right now, and you can see that.
Perfect.
All right, so just for the first thing, I had the chart here pulled up of the SPY, and just to sort of
hold on. So question. So you use TradingView for your charts? You don't use Thinkorswim or IB or anything?
I use Thinkorswim. I just for Zoom calls, it always comes across better on TradingView, and it's easier to draw the stuff. So yeah, so I just do that. But I'm a Thinkorswim for charts.
Yeah, no, same me. I tried using TradingView multiple times. I just always went back to Thinkorswim.
Yeah, and so mainly because you could trade with the charts, right? You could trade with them. So even now that I use IB, the Thinkorswim charts, I'm glued in on them. But for presenting, the TradingView ones are really nice and smooth. But for me, for example, today, the first thing we were kind of talking about was that the opening print, right? And the value of that, and sort of the value of using that as a reference point. So before we hopped on this call, I threw this chart up where I took off all other levels except today's opening, right? So this green here is where we opened the day. And this will be the same price on any time frame, right? Daily chart, 15-minute, hourly. Doesn't matter. That is the first transaction of the day that goes through right there. And for me, that will act as a line in the sand a lot of the times for the day, no matter what, right? That will be sort of our main reference point on it. So even if you were to know nothing else, right? If you were to know nothing else and you were to be watching this chart from the open, right? And you don't trade the actual opening candle itself, you kind of you let that play out. From there, right? If we are just using and thinking about how does price react to this opening print, right? We can see that there's actually a nice trade opportunity over right around here where we have consolidation underneath it, right? So in this example, we see based on how my system would work, right? If we're just sort of examining what's happening here on the story, in sort of the story, we open up plus sell off. And this is a clean intraday downtrend. So without having any other support and resistance levels on here, without having anything else, just what happened in this opening part of the day, right? We opened up and we sold off, right? And we were also, the important part about this, we were in an intraday downtrend, meaning that we had set a higher low, or potentially not a higher low, but a low there, right? We had set a low there, tried to hold it, and created a new low on this push down. So all of a sudden we have a clean intraday downtrend, and we can move in that. So the first step is beneath the opening print, within a downtrend, right? I'm not looking for longs at this point in time, right? There is potential short entry right here, but rather than go into that, I'm more thinking, okay, if I'm going to use the opening price as a reaction, I can use it in one of two ways, right? If we get price reactions back up towards the opener, if we move back up there, that would either, in theory, work or fail, right? It's either going to reject the opening price and keep selling off, or get back above and keep trending up, right? It's basically, or I mean, I guess in theory, it could just go sideways at the open, but let's be fun and pretend it doesn't do that, right? So that's, again, all just pieces of clues of my information that I'm paying attention to, right? And that I'm watching. So something, as I'm watching this, what happens today, and I actually didn't take any of these trades today. I just, the daily chart kind of dissuaded me from wanting to trade.
Just a question. So see, like, for example, once again, going back to what we were talking about before, different styles of trading. So for me, when I see that opening sell-off, right? So see how we made a new low on the first box that you created, then the second box. When we start finding a higher low, right? And we start kind of going around the 10 a.m. mark, 30 minutes in, and we start holding a higher low, a lot of times that's where I look to go long. For not a long for the whole day, maybe a 5-10 minute trade on the upside, maybe a bounce play, maybe something along the lines of that. Now, how come you don't look for that reversal, trying to catch that? Just curious. Once again, not saying it's right or wrong that you do or don't do that. Just trying to understand from a different trader's perspective.
So I will actually. So I don't mind. I don't mind doing it, but one of the rules that I have is always trade with trend, right? Always with trend. And so, like you mentioned, based on my system, I'm not permitted to take a long right here at this sort of pivot and potential higher low, just because in theory, we're still making lower high. That's still a lower high. We have a lower high there. This is a potential higher low, but it's not confirmed yet, right? And we're still in an intraday downtrend. So that's just, I mean, like you said, that's just detail versus detail. You know, there's no right or wrong there.
Yes.
But as soon as we actually broke over right here, this area, right? And now we pull back and we pull back to here. All of a sudden, this technically is an uptrend, right? We have broken over this higher, lower high. We've broken over this previous area that failed to hold. All of a sudden, we are technically in an intraday uptrend right now. Is it super strong? Is it the best long out there? No, probably not, in my opinion. It's not a this isn't a textbook definition of an uptrend for me, right? But this is an uptrend. And so when we start to pull back, now that we've flipped over lower highs, now that we've found an uptrend, now in my system, I'm permitted to take longs, right? I'm permitted to take longs, especially if there's a level there, some sort of reference point. I'm permitted to take longs, but the first entry of the day to me would be right here. The first entry of the day on my system, I'll delete these other little boxes for now, just to keep it clean. But the first entry of the day would be for here. And part of this thesis of this trade would be targeting the opening print, right?
Now, so hold on. So if you I just want to pause. So if you're taking the trades, are you still looking at the 5 minute? Are you looking at the 1 minute? Are you looking at a 5 minute close? Are you looking at a 5 minute open above that zone? Like, what are you looking in terms of action?
Great question. So I'm a time frame freak. So I'm actually watching all five.
No, same. Same. That's what I was asking.
Exactly. So I'm watching the 2 minute, the 5 minute, the hourly, the 15 minute, all at the same time. And I think that that's a huge portion of it. So at this point, for this particular example, the way that I would trade this, and this is where I have the 1 bar stops that come in a huge play for me, is that once this candle closes, right? Once this green, actually, let me keep this away for now. Once this green bar right here closes, right? It will act as a PHL, right? It's a potential higher low here. It's not a confirmed higher low. And again, everyone learns this in the very beginning. Until we make a higher high, that's not a confirmed higher low. So it's a potential higher low. So for me, all of my trade entries usually will come off of potential higher lows or shorts, potential lower highs, right? That's what I mean. I love to trade with trend. I like it because it's just easier that way, right? It's less stressful for me. So for me on this trade, by letting this bar close green, we've pivoted here, right? We've been moved up. We're in an uptrend. We're making higher highs. Now we've started to pull back and we've pivoted there. And by pivoting there, that ends up acting as a reference point in somewhere where I can find an actionable trade, right? This green candle can act as my signal bar telling me to enter the trade and allow me to enter with a 1 bar, 1 candle stop loss, right? So for me on this one, my entry would be whatever time frame you're using. The cool part about this is we're looking at a 5 minute chart. This is same principles are applicable on a 2 minute, a 15 minute, a daily. That will dictate whether it's a scalp, a swing, or whatever, right? I will enter the trade when we break over the high of this bar right here, right? Of that green candle that closes and acts as the potential higher low. And I'll keep my stop below its low, right? Because to me, if we fail this right there, right? If we fail that potential higher low, then all of a sudden the chart is actually no longer in an uptrend. It's in a downtrend again, right? We're failing a potential higher low. In my opinion, we would look for a new break to lower days, right? This would be, which happens. These setups fail sometimes, right? But on this trade, if it setup works and I'm able to take a long entry over this candle's high, the stop is like 30 cents, no, like 50 cents away. It looks like 50. This looks like a 50-cent candle.
Yeah, about, I'd say
about 50 cents right there, right? And so if I have a target at the opening print for the day, right, then all of a sudden I'm looking at 3.4, our multiple in my plan,
which is great. Yeah, which is great.
Right? That's a solid trade. That's a great trade if you can execute that one well. And for me, this aligns up with a lot of my system because let me kind of add to these notes. All right, let me take that one off here. So I'll put system with trend, right? I want it to be with the trend. And on this particular trade here, now all of a sudden, because of this action here, we are in, even though it's a funky one, we are in an uptrend. So my first note, with trend, I'm able to take, yes, that is a with trend long, right? I'm able to find something in there. I'm able to say, where is the opening print, right? Where is the open in relation to the trade I'm taking? Am I above the open? Am I using the open as a target? Am I using the open as a reference point to take it, right? And in this particular example, the opening print acts as a great target for me, right? This acts as a great potential target, knowing that, hey, we've flipped into an uptrend now on a smaller time frame chart. The opening print is the next logical place to go and tag, right? If the market, I guess one of the things I should have mentioned is that one of the rules that or principles that Eric taught me, the market will move from level to level. Whatever support and resistance level you have, it's not random, it's purposeful, right? So by us flipping back into an uptrend over in this area, right, all of a sudden the opening print becomes a very reasonable target and our next level above. So it makes sense to go tag that, right? We're not flipping into an uptrend for no reason. We're flipping into an uptrend with some sort of purpose, right? At least that's what we assume is the big money, whoever's controlling it, is doing it. So for me, just to first target here, this is a 3.4 potential R trade, right? This is something that can give me a very nice ride. Now, if we're going for a gap fill, all of a sudden, let me get rid of that, but all of a sudden, which actually ended up playing out today.
Oh yeah, crazy.
That's a 10R plus type of trade. And that to me, this is not like a crazy, right? Like this, again, I wish I had taken this trade, but I was just more, I was hands off today. And for my mentals, I needed to be hands off today, right? But this to me is like people sometimes might feel like, oh man, what a crazy move that was in SPY, right? To me, it's like, no, this all makes sense. And from a trade perspective, up until, let me move this out of the way, up until right here, there's no reason to theoretically close this trade, right? Because if you are entering off of a potential higher low and holding as we're in an uptrend, right? A push up here, this bar might scare you a little bit, but it shouldn't get you out of the trade.
So let me ask you this in terms of scaling and scaling out. When you are in a trade, right? Let's say you're up 3R, 4R, and talking in terms of risk reward ratio, right? You're up 3R or up 30%, whatever amount is. Do you ever try to lock in profits for cash flow, or do you just try to have the whole position?
I will try and I'll take profits for cash flow 100%, especially when I'm in bigger size and I want to just try and take sort of trims off to lock the initial move in. But I try to hold my stuff for targets, and it will haunt me sometimes. But what I've found is that, and I think this is actually really true for most traders, like the targets we create, how often do we see them hit? Like a lot, right? Like like our plans work. Like we say like, oh man, I want to take a long on SPY here, targeting the gap fill, right? And so if you take that targeting the gap fill, and a lot of times that actually works, right? These trades play out, but there's infinite amount of times throughout this trade where you could get trapped out for some reason. So for me, there's two ways that I'll do it. One is managing based off a trend, right? During this action, at no point did we flip back into a downtrend, right? Every time we tried to pull back and pivot here, we held, right? Attempt to pull back, pivot, we hold. Attempt to pull back here, attempt to flip, pivot, we hold, right? All the way up until this point in time, right? And as soon as we break beneath this little area that tried to hold, all of a sudden to me, I'm like, I'm out, I don't care, I'm over it, right? Because now all of a sudden it's potentially that we're not in an uptrend anymore, right? It's potentially that we're changing, we're fighting the trend. And you can see that we did get a little rally back up there, but that ended up being a good stop, in my opinion. That ended up being a good place to take this position off and leave it be. Was after we sort of lost this area right here, right? So just to get back to your question again, sorry, I know I ran.
No, you're good. You're good.
The first thing that I do is yes, I will take cash flow trades along. I will trim. I like to do that. I'm a big advocate for locking stuff in along the way. But I do like to try and hold to targets. The only time I'll change that is I'm constantly examining my R multiple, right? Constantly examining, right? So if you draw it out from a risk reward perspective that your entry is above this candle's high, let's say you're going for the target of a gap fill just to previous day's close, right? Your stop is beneath here, right? This is great. It's 11 potential R trade, right? But let's say now we move up and all of a sudden we've moved up here. I'm going to start trailing my stop
Which
up
is
to
what,
a pivot.
yeah, that was going to be my next question. Because as the trade goes more in your favor, your R multiple or R changes. So how do you manage that in terms of profit taking, in terms of moving your stop? Like, what do you start doing there? So
for me, I start moving my stop up, right? I'll start moving my stop up, but at a certain point, you get close enough to targets where no matter how far you've moved your stuff up, at some point in most trades, it actually becomes more risky for you to hold, right? Because you're risking more before you stop out than the distance from your target, right? So for example, if we let me move this real quick. If we kind of pull up to up here, right? And I'm in this long from right here, and my target is still up at, let me say we're up here. My target is now right there, just a little bit away, right? $1.64 away. And based on my system, I'm going to keep my stop beneath the opening print, right? Let's try and see if we can make it so we don't see what happens. But I keep my stop below the opening print. All of a sudden, my risk reward has shifted here, right?
It shifted massively.
At this red bar, it actually costs me more to potentially hold this trade to target than it does where I would stop out on it. And at that point in time, this is where I would have exited this trade fully, most likely, is knowing that R multiple has shifted, or I would have moved the trail up to a point where I probably would have gotten trailed out, and I probably would have just taken the stop. So that to me is like the two biggest ways to manage a trade: is manage it based off the trend and off pullback areas, but then also is your risk rewards telling you that this trade is still worth it? Because if it's not, you shouldn't be in it.
I agree. Yeah, I think that's a very important thing, because people don't realize when they're in a trade and it starts going in your favor, the reward factor, risk factor adjust, especially when you're really, really like it's really going in your favor.
Yep.
If you keep your stop at the same point, now a lot of times you're risking $1,000 to make an additional $100, which doesn't make sense. So it's like you need to adjust your stop, see if it even makes sense. Should you take some off the table? Should you close the whole trade out? Is it even worth it for that extra few, cents or dollars for a massive risk amount? And as traders, you need to be able to manage that, which is something I want to dive into in a bit. But before I dive into that, what I wanted to ask, so this is the action that happened, in real time. You obviously managed the action. You were able to read the action, understand it. But now, before going into this action, going into the day, how does that look like for you? How do you kind of take this day and have not a prediction of what will happen, but kind of a game plan of, hey, this is how I will navigate today's action, and this is kind of things that I'm kind of not expecting, but if I see X, Y, and Z, this is how I'll respond. How does that look like?
For me, it all comes down to the levels. It all comes down to the levels. Everything is price is the ultimate king, right? Whatever price is dictative over. So for me, coming into the day, there was a specific level on ES. I was watching it. Let me see. On ES, I was watching it at 30. What was it? 3750. I think it was 3755 quarters. Yeah, 3755 quarters. So for me, given where we opened up this day, which was right here on this particular bar, ES is a little harder to see. But ES, given where we opened here and given this level right here, that to me is where I'm sort of formulating my thesis of what can happen, right? Yeah. So for example, today, the key level I was watching was the 3755.25. Right. So for me, becomes my main reference point for the entire day. I think we had one to the upside up at 3791. For me, I'm watching, okay, so my ideal plan this morning was I wanted some sort of push up, kind of sweep over this area and fail. And then I could take shorts back beneath the open, targeting the level and try and use that level as my target. So again, it all comes down to where is the level and how do I think we're going to get there, right? And then the opening print is sort of my intermediate for that, right? Like if I believe that we are going to trade down into 3755, right? I can use the opening print as one of the methods of entry, right? But in this example, you would have had to short through the first 5-minute candle of the day. And I don't love to do that. That's not I like to give it a little bit more time. So and then we never had any sort of, in my opinion, entries up here, right? We went and tagged the level, kind of bear flag, kind of gave a consolidation pattern before breaking it, but there wasn't necessarily any shortable entries here, right? So from there, then just becomes watching for different types of reactions at the level. See, we had, this one actually played out very nice. We had a push back into the level, kind of failed to get back above there. But once we got back above, we actually developed a really nice intraday uptrend and got that push back up, right? So this level acted as my main reference point, and it kind of added some validity to that setup that we were looking at on SPY as potential long. That was right here, which was right off of a level, right? So if it's off of a level, that adds another factor to my analysis, because all of a sudden it's like, hey, we're with trend. I know where the open is, right? I know that I'm buying a higher low, potential higher low in an uptrend, right? And I have a level there, right? So if I'm wrong, there's a whole lot of like reasons for me to get out and be wrong.
Makes sense.
And actually stop out and close the trade, right? So really from pre-market and in terms of forming all of my theses, it's where are we in relation to the level, and how could we make a move towards that level, or take a trade off a reaction from that level.
Interesting. Okay, so now when market does open, what are two factors that you look at where it's like, okay, I will trade or I'll stay cash? Because that's something in this market, I think we've had days with a lot of chop, a lot of sideways action. So how does one kind of decipher, hey, I should go cash, or I should trade, or I should size up?
This is honestly probably one of the most valuable questions that we'll talk about on here, because I think that is what so many people blow up during chop, right? So for me, it's kind of a two-part answer, as with most of my answers have been.
No, you're good.
For me, it all starts with the daily time frame, right? The daily time frame. If the daily chart is in some sort of a range, or the structure of the daily chart, that to me will sort of dictate what I'm sort of looking at for this action. So for example, during this chunk of time on the market, I was very inactive. I was not very active. I was not trading all that much, because no matter where we opened on any one of these individual given days, we were stuck in a range. We weren't, and unless we were getting some sort of breaks, it was going to be some sort of range day behavior, right? Some sort of range chop behavior. For me, for example, for today, for yesterday, how I saved myself a headache was I said, I am going to short SPY if we get acceptance, strong price action beneath yesterday's low, right? That was my game plan. And I said, but I think the whole world wants to short after this big red candle. It wouldn't surprise me if we don't do all that much, right? So in order for me to short, I need us to have truly accepted beneath yesterday's low, right? And if you think of just from a common sense why perspective, if we don't get beneath yesterday's low, we're just trading inside of this big red bear candle, right? I don't want to be long inside of this bearish red candle, right? And I also don't want to be short if we're not getting follow through and breaking down beneath it, because we're just sort of stalling. So for me, that was how it was sort of coming in today, was, okay, I have this defined sort of rule, and we'll throw on extended hours so we can see how yesterday's was, right? But the rule was look for confirmed, and I wrote this in my little pre-market plan, right? Which was confirmed trends or acceptance beneath yesterday's low, we can look to take shorts. This green line, we never got acceptance beneath there or a clean trend, right? We had a slam down move sort of at the open, but this isn't a downtrend. We rallied back up and set a lower high, or set a high, right? We then pushed back down, set a higher low. At this point in time, we have no trend. There is no edge going on that provides you with an opportunity to find an edge, like an edge within this market, right? Because if I ask you, are we in an up or a downtrend during this chart? You could tell me either answer and make a case for either answer, and it's probably true, right? I mean, you could say, okay, the reality is that the highs and lows of this day were set within like the first 30 minutes, and then everything else was just range chop in between, right? So for me, people have always said, you can tell it's range chop after the fact. How did you know it was going to be range chop? For me, comes from the daily chart, right? That daily chart was such a hard, ugly bar on Tuesday, I believe it was. Yeah, Tuesday. That's such a hard, ugly bar that, again, below its low, we have plenty of room to fall if we accept there and we start developing a downtrend beneath there, right? Like if we start to get this type of action that we had on Tuesday, on Wednesday, then I'm going to be shorting every single lower high pop that we get with a one candle stop, right? Trying to trade with the trend to capture this huge
as much as possible.
Here we just don't have that sort of action. We're not getting the follow through, and we never got a clean downtrend beneath the previous day's low. Every time we broke beneath previous day's low, we kind of got a rally. The only time, and I told this to a lot of the people I work with later, the only time you could have considered if you had followed my plan to a T, taking a trade yesterday, was like right here, right? Where we've kind of accepted beneath yesterday's low and have kind of got a downtrend going on. But by that point, you're like 4 hours into the market.
Yeah.
You're probably not at the desk. So there was nothing worthwhile yesterday that caused that, and it all that for me stemmed from the daily chart, right? So it stems from those longer time frame charts. Do we think the daily candle will be potential to trend, or is it going to be more of a range bound day?
Interesting. Okay. Got it. So we got the pre-market of how you're making your game plan. We got the trades. So now after you've executed the trades and you've taken the trades for the day, how are you journaling? What's your journaling process? What's your recap process for all of that?
Yes. So for me, on my day trades, when I'm done for the day, that's when I upload to TradeZella, and I do a CSV file. And when I upload for the day, I am done for the day. That is my rule, right?
I do the same thing.
When I upload, I am done. And I'll tell you this, I have broken that rule twice, and I have lost money both times.
Twice. Same here. Same here. Same here. I've done that a few times. And one time I had my biggest losing day where I think I made $9,600 in the open. I uploaded and I was like, oh man, it would look nicer if it was 10,000. It would look nicer if it was 5 figures. That day I walked out negative 16,000 and it was 0 GT. Yeah.
It's always, dude, that's always for me. I gave back. I had a great start to June. I gave back some profits this week. It's because I wanted to hit subconsciously. I wanted to hit 100K in June. And I took a little bit too much risk on this. I wanted to hit that round number. Now I'm going to be closing more around 60 because I made some stupid mistakes and gave back, 10, 15 this week that I shouldn't have given back, right? That was really not good. Just for reference, I took a trade on CrowdStrike this week, and it was actually one of my favorite setups. I love a pattern like this. Let's call it a 1, 2, 3 pattern where I entered, before sort of looking for continuation breakout on this. Also has a very clear and defined stop loss of below this candle's low, right? And the contracts are still sitting in my account. They're still there. I haven't sold them yet. So it was one of those trades where you just ignore, right? And you just go until, and that to me is part of trading that, and part of the journaling aspect that, like, until I started to take serious notes on what I was doing, until I started to pay attention on like really uploading them and seeing the structure behind them, right? It was scatterbrained for me, right? It was just all over the place. Nothing had any sort of structure with it, right? And there was a lot more times like today where I'd end up, or like this week, where I'd end up holding a bad trade longer, right? Holding a bad trade longer. So for me, when I'm done for the day trading, I upload to Zella and I am done. That is a firm rule. I am done. I try not to come back. It's a little different with swing trades for me. Like, for example, I haven't uploaded that yet, right? Because it's an open swing trade. I will after tomorrow, once she expires. That's not a pretty sight that's sitting on my account. But for me, the journaling process is that even just that upload is huge, right? It's an upload, and I have to be better at this particular month. I got to go back in on my last week, that I traded, which was last week. I haven't touched my interactive brokers this week, is to fill in the R multiples, right? And actually enter in where was my stop and all that. Because I have that written down by hand. I have it written down. I remember you and I talked about this once, because there was one period of time where I'd gotten TradeZella and I'd slowed down using it a little bit. And you're like, dude, do you not like all this? Like, for me, I was everything written down by hand for years. So it's hard to like get away from that.
Get away from it, yeah.
Yeah, so I write everything as I signal the trade, as I enter it, as I follow the signal, I write it down by hand where my stop is and all that. So at the end of the day, what I do is I just upload the CSV file, but I need to be more strict on, writing in the R multiple, writing in, calculating, and doing all of that. But for me, just looking back and seeing it, and seeing the sizing on some days, right? Seeing the shuffling on some days, seeing the extra trades on some days, right? Like, you look at my TradeZella P&L, there's May, I was getting used to a new broker. I'd switched to enough brokers. There's a lot more trades on there, right? And then you switch to June, I've traded way less and made more, right? Like, I've traded.
Would you be cool with sharing that, or
yeah,
maybe the calendar or something?
Yep.
Yeah. Just.
See, this is what I was telling you. You have competitors that say TradeZella alternative when you pop up.
I know.
That's how you know. That's how you know. I know. Them, right?
Trust me, I know. Yeah, no. I seen your progress for June, especially the first, week to 2 weeks for one of your accounts, and I was honestly blown away.
It was a crazy June. It was a crazy June again. So I don't have anything updated this week. And that's just because truthfully, I have the Monday swing trade that it's going to be, you're right. And I haven't touched it. I haven't touched my Interactive Brokers account since then. Now this isn't fully indicative of my trading week because I do have a separate broker on Tastyworks, which is not available right now.
We're getting to that.
Yeah. Oh yeah. But that, so I'm down this week. I'm down like 12K. So my, March P&L will come out a little bit, actually not March, my June P&L will come out a little bit closer towards the 60,000 mark, like I had mentioned, right?
I mean, listen, 60 grand in a month from
Dude, I'm a happy camper.
Listen, that's
happy camper. And the reality is I pretty much this week right here, it was quad witching, OPEX and FOMC. And I said, fuck that. I'm not touching my main brokerage. I'm skipping that. And I'm very
very, very interesting point, because so looking at your calendar, right? So the typical trader, this is how their calendar looks, where they make money the first week, second week, the third week from 13th to 17th is where they blow 80 grand or 90 grand, where they give away their profits, maybe some more profits, some account equity. So those are very crucial weeks where, obviously I think a lot of people shouldn't trade. How do you get yourself to that point to be like, I'm not going to trade? And were you always like that, or did you have to get yourself there?
No, I was never like that. I have the worst habits of anybody. If anybody out there thinks they have bad habits, I had worse habits in the beginning and I've managed to flip them. So I promise you can. So no, for what I do now is that I have a Tastyworks account that I keep it like $5,000 or $7,000. It's very small. If it all goes to zero, I don't care, right? Or it won't affect me emotionally. This Interactive Brokers account is what matters to me. This is the one that is like my year to date. This is what all that, and this is the one I'm focused on, right? So during this week, I wish I could say that I had the ability to just not trade at all, but I did still trade on my Tastyworks account. And this week, I remember very specifically, it was like minus 1,000, flat, because I didn't trade FOMC. Then I shorted Tesla this day, made what I had lost back plus 1,000, and then sat out Friday. So it ended up being like $1,000 week or something like that, which to me, I would consider that like a slower week for me, right? Generally speaking, $1,000 is not something I'm happy with. But on that week, I was stoked. I was so happy because for me, I have been so many times have I given back profits during the middle of the week during an FOMC. I was surprised that it never really happened, but you can see the day where there was 30 trades.
I was going to ask that. You went from 30 trades, like you have 11 trades, you 20 trades, 13 trades, 11 trades. You go to June, you have one trade, and you're making a killing.
So part of that was me getting used to a new broker, Interactive Brokers. On a lot of these days, I was doing 5-10 contract orders afterwards to see fills, get used to stuff like that. But this day was my worst trading day ever from a execution standpoint, right? It was I was over trading,
wow,
and it worked out in the end because I was only ended up down $837. That is not my biggest losing day.
How'd your daily P&L on that day look? Can you click on that day on the 19th? I just want to see the fluctuation of the P&L. Wow.
Brutal, bro. Brutal. Just terrible trading, right? Down to 10,000 at one point.
Wow.
Right?
You were down to click on that. If you just click on that screen. Yeah. Wow. You were down to, wow.
And again, people who were I did a Zoom call yesterday. People on my Zoom call, they see the SPX and they go, Jake, I am an avid person against SPX as an instrument, 0-day SPX, unless you're like a professional trader. I'm like a huge advocate against this one, right? And for me, what it really came down to was
you were up
a little bit earlier in the morning.
Yeah, you're realized $1,700 up.
Watch that fade, right? And then from there, I don't know when it says, oh, how am I going to make that 5,000 back, Umar? I'm going to use 0-day to expiration XTX options. That's how, right? That's how. Wow. And it's the worst idea of all time. And this particular day, I got lucky. My tilt got me back towards 800, whatever the case may be. right? But this is one of the 30 trades, right?
Yeah,
I'm the guy who advocates less is more usually, right? I want people to trade less. That's a big thing.
Listen, happens to a soul. I've had days like that too. I don't think I've had a 30 trade day recently, but I've had like a 15, maybe a 10, not a 30.
Brutal, bro. Brutal. And it's just, wow. I remember it's like, for me, you asked again, or like, how does the journaling help you? The other part of the journaling that helps me is keeping me accountable, because that 30 trades, do you know how many people have DM'd me and been like, what the fuck? What do you mean 30 trades?
30 trades, yeah.
Like, it's just like, you have to defend that now. Like, I have to take accountability for that now. I have to like, and so for me, journaling, oh God, it's affected me in so many different ways. But having the routine of when I upload, and also having the accountability of, making sure, which again, I'm going to upload, you're going to see, I took a loss on these CrowdStrike calls. It's just still technically open. They'll go to zero though. But for me, having that accountability is like next level, right? Like that to me is like, now I know that, like, especially me, like, I'm trying to grow my Instagram. I'm trying to grow in that way. Like you have to have accountability in who you are, or just as a trader. Right? Like,
of course,
like we talked about before, you have no boss as a trader. You have no boss. And that's awesome. But that means you also, for lack of a better term, you have nobody to tell you when you're doing really dumb shit. Right?
Yeah.
Like,
yeah.
Nobody to tell you that.
Absolutely.
And a lot of us do really dumb stuff all the time. Right? So for me, TradeZella and journaling kind of acts as like the boss, right? Like, it's kind of like, that's who you report to. That's who you talk to, and ultimately, like own up to, right? Own up to your mistakes and to your good things. That's your boss in a weird way.
No, of course. No, that even for me, I think the biggest key takeaway in my trading has been, journaling. And that's what even the idea of TradeZella came in from. Because for me, I would make a lot of consistent mistakes. I wouldn't have an edge. I wouldn't have accountability. So then when I started diving into my trades, diving into my performance, I'm like, wow, when I take 2-3 trades a day, I do very well. And the moment I have 6-7 trades, I start doing bad. What time frames do I trade well under? What time frames do I trade bad under? Wow, I make most of my money in the first 45 minutes. Anything I take after, typically I'm losing money on. What size do I trade well under? Hey, I've noticed that whenever I go above this size, I start losing money. So I'm sizing up too quick. What setups work the best for me? So when I started really digging into that, it started making me more accountable, like you said, where, hey, do I want to plug this in? Do I want to plug this stupid trade in? Like, if I take this, I'm going to have to plug it in, and I don't want to look at a stupid trade on my Zello platform. And then also having to look at the tags of what mistakes am I making? Was this a good trade? Wow, I made $5,000, but realism, I risked $15,000. So was this a good trade? And I'm like, no, not really. So kind of, for me, person just opens up that whole idea of seeing in depth of your trading and of, your real execution and raw data.
100%. And for me, when you were mentioning that, the biggest thing that comes to mind is that you're a professional, right? You are a full-time professional day trader. You do this. This is not a job for you. It's a career, right? It's a career. If you are someone who's looking to take your trading to the career level, where it's not just a job for you, not a side hustle, not all that, then you need to be journaling. Otherwise, you're not treating it like a professional, right? Like, professionals journal what they do. They track their metrics. They understand how to learn, get better, right? And so there's a whole lot of steps that I would encourage people to take if they want to become a professional trader, a pro, a full-time real thing. But the first one's journaling, because that's what pros do, right? Like, learn from people that have had more success than you, right? You were the first person that ever told me to journal, right? And it was before I'd ever, talked to you on DMs or anything like that. It was just through your mentioning of TradeZella and all back in the day, right? And I really, like, that was the first time I was like, man, like, I got to take this seriously, because that's what the professional does. Like, that's what the pro does. I want to be a professional. That's what they're doing. That's what they do. The big traders at hedge funds, prop firms, all that. You think they're not checking their stats? You think a hedge fund manager or a prop firm manager is not checking the exact details and specifics of analytics behind of a trade? It's like, of course they are, right? Of course they are. Of course. So if you want to be a professional like this, you got to treat it like a professional would treat it.
No, absolutely. Right? Absolutely. And I think it's super, super important. You got to track, if you can't measure something, you can't, improve it. And that's like the whole idea of, tracking anything you do in life, how well you're performing, how bad you're performing, what you need to improve on, things like that. Yeah, 100%. No, great stuff. Great stuff. All right. So I'm just going to take the screen share off. I just had a few more, ending questions, just so we can have our cameras on. All right. Perfect.
There we go.
All right. So last few questions, right? So, one is, what's that one advice you'd give yourself? So if you could go back to 2018 when you're starting out, you spent 18 months trying to figure it out. I always say, upcoming traders don't need 2 years to get good. We have so much resources, so much tools, so much things out there that if learned the right way, you could cut that 18-month time period. For me, it took me 2 to 2.5 years, but going back, I think I could have cut it down to maybe 6 months, maybe 5 months. But you going back to 2018, talking to yourself and giving yourself that bit of advice, what would that be?
The first thing I would do is kick myself in the head, and I would say, stop ignoring the psychology that everybody tells you to focus on, right? And that was the biggest thing. I cannot tell you how many times somebody told me to read Trading in the Zone or read a book like that, and I didn't. So my first piece of advice would be, I'm speaking to any individual person out there, you are not smarter than the market. You are not the greatest trader of all time. You as well need to focus on your psychology, your mentals, your journaling, the back end work of being a trader that's not strategy related, right? That would be the first thing that I would harp on and really try and drill into my brain, is that the strategy is far, far, far less significant than the mentals portion of it. You want to have a good strategy, but it won't mean anything until the mental aspect there. So I would slap myself and say, read the book. Just read the book. It's worth it. It will change your life. I think everybody who I've ever talked to who's read one of those two psychology books, it changed their life, right? So that would be the first thing. And the second thing I would say is something that I've heard you mention a lot. I've heard a lot of traders echo, and it never really stuck with me, which is that your first year or your beginning stages of trading should not be about the money. You should have zero focus on how much you make, what you should do, because guess what? However much you make in year one, unless you're lucky or unless something crazy happens, it's usually not going to be substantial to like your long-term wealth, right? Like even if you make 20 grand in your first year, 20 grand is great, but that's not going to move the needle for you to become a millionaire, billionaire later in life, right? The habits you build during year one, the discipline, the patience, the watching screens, but not trading, all that will actually like make you rich in year two, right? Like if you can do all of that for year one, that is way better than the 20 grand you might make with bad habits if you get lucky, right? So that would be my emphasis to people, is that stop focusing so much on the day-to-day P&L, focus everything on, was this a good setup? Did I execute well? Did I follow my plan? Were my mentals intact the whole time, right? If you do all of those four things, the money will come. It will naturally come suit and follow along over time, right? So just to sort of loop back, one, focus on your psychology to everybody, and two, process over profits, right? The first years, you will learn habits that can set you up to either do great or set you up to be like me, where you have to set alarms on your phone so you don't go on tilt, right?
Yeah. No, phenomenal. Great advice. Great advice. I think a lot of traders need to hear that, especially the money part, because, people start and in month one or month two, they're like, I'm not making 60 grand a month. I'm not making 100 grand a month or 200 grand a month. And I'm like, hey, wrong focus. Don't focus on that. So I think great. And you put out a great message on Instagram too. I always see your stories, super interesting and super fun, by the way, and entertaining. And now to end it off, what are your goals for 2022? Like in terms of trading and everything, what are you trying to do? How do you set those goals?
So I set a goal at the beginning of the year, and I'd like to try and stick with the goals I set at the beginning of the year, which was I would like to make 500K plus this year from trading. Will that happen? I don't fully know, because I actually wasn't anticipating the market to stay like this for as long as it has. And I'll be the first to tell you, this is not my optimal conditions. This is not the time. These are not my favorite times. I'm a better long trader than I am short. So if I don't reach that goal, I won't be like disappointed in myself or anything, right? My goal from a dollar perspective was the 500. That was, I think, to see if I can make that verified, all of that, right? But even more important than that, my biggest goal this year was to involve less stress on myself as a trader, right? As a trader, we pick and choose our stress. We can either choose to make life stressful or choose to have no stress at all and not watch the charts, right? And what I had done a lot of in 2021, even before I'd had a very good run in, the end of 2021, is I was at the desk for a long time of the day. I was trading a lot more, right? For me, I came into this year with a firm goal to trade less, right? I wanted to make more on same or similar size, but less trades overall. And I wanted to be more open to the type of ideas where, hey, 30 minutes into the day, if I don't like the action, I'm just going to get out of here and go to the beach, go skateboard, go do whatever, do anything, get myself away. So from a dollar perspective, I'm hoping to get towards that $500,000 goal for profit, verified profits for 2022. Don't know if it'll happen because last thing I want to do is try and oversize in a market I'm not really comfortable in. I set that goal kind of with the expectation that we might have bottomed out, a couple months earlier. So for now, I'm just continuing to try and keep everything in check, right? When I can have these big weeks, when I see these good setups to execute on them, but when they're not there, to remain hands off, right? Really, that was my biggest goal, was on the days where there aren't A pluses and there's not my favorites, just be hands off. Just be hands off, go slow. And I think this week and last week were two huge examples of that for me, because last year I don't think I would have had the same discipline that I had this year to just stay away, right?
No, phenomenal. Just a personal question for me. How old are you?
I'm 26.
Okay, 26. Yeah, wow, super young, man. I had a feeling I was like, wow, that's very impressive. Been trading for 2018, so what, 4 years now, right?
Yeah. So four.
Wow.
4. Yeah. Yep.
Wow, that's impressive. That's phenomenal. But yeah, man, just wanted to, you have any last words for the audience? Anyone on here, anything you want to share? Or
I'll just say that, look, I've mentioned this a few times here today, but it means a lot to me to emphasize this for all of you, which is that if I did it, you can, right? I am a normal human being with learning disabilities. I'm not meant to be good at this. I'm not patient. I'm not an extremely disciplined person. These are not traits that I have that I have as a normal person, right? But I have rewired my brain to function and structure and thrive in this environment as a trader. And it took a lot of rewiring. If I can rewire my brain, no matter how much you might have been struggling now or for the past year or 2 years or however long, it starts with rewiring your brain, but you can. It's possible. Yeah. If I could get that out of the bad habits of depositing a paycheck, then losing it that day, I promise you, you can get out of these bad habits too. You genuinely can. Aside from that, I just want to say thank you, bro, because it is truly an honor to be on here with you. You are the gold standard of traders online, right? You are the one that's been around the longest, verified with everything, transparent. Just so to have this opportunity to speak with you on like a peer level like this, it's like a dream come true for me. So I
appreciate that. No, I appreciate that.
Enough,
likewise to you. I think you bring a very fresh breath of air in the trading community, right? Real genuine, real educational stuff. Like, it's not the fluff that we see with people buying SPX calls or puts with no strategy, making people blow accounts, which I'm really against. So I see that, and I'm like, I'm loving what this guy is offering in the trading community, and it's coming from a real genuine place of trying to help and making everyone better around him. So I appreciate that, and thank you for joining this call and sharing so much valuable insights. Like I've been taking notes like this whole time. Like while you've been talking, I've been taking notes on things you're saying. And after this call, I'm going to go look into these things. And I've learned a ton myself. And I'm pretty sure everyone watching this, listening, whatever, they took a lot of value out of this too. So thank you so much for your time, and thank you for everything you've shared, man.
Awesome. Thank you so much.
Thank you. And everyone, I'm going to post his Instagram and everything down below. Give him a follow. Tons of great, educational content and trading and personal stuff too. It's super entertaining at times. So check him out. Yeah. So thank you, Jake. I appreciate it.
Thanks, bro.
Thanks, man. Thank you.